Hey, this is Dale Corpus bringing you episode number 6 of the Stroll by Dale show. I'm recording in a different location today. I'm in the city of Palo Alto in one of the offices of my business partners. Standing right next to me is Chris Torres. He's from Irvin Abrahamson Co, and he's a CPA. So this means that today's show is all about taxes and how they affect you and potentially even benefit you when it comes to owning real estate. So Chris Torres is an extremely experienced tax professional with over 15 years experience in the industry. So we're going to have him bestow his knowledge upon us, so please stay tuned. So can you tell our audience a little bit more about yourself and your business?
Yeah, sure. Well, our firm has been in business since around 1965, so that makes it over 50 years now. We've served mainly the Peninsula and Silicon Valley for most of these years, but of course we have clients everywhere.
Okay.
And we have 6 professional staff in the office and 2 administrative staff. And a lot of us are very seasoned professionals who have been in the industry, more than 10 years.
Oh, that's awesome. Yeah. So you're able to help even clients remotely if they necessarily can't even make it to Palo Alto. That's okay as well, right?
Oh, absolutely. Yeah, we have clients from all over the world. Some of them newer ones just like to email us and correspond with us electronically. So it's
really virtual. It sounds virtual. Like sometimes.
Absolutely.
That's good. So I know you probably work with a whole variety of different clients and their profiles, but I'm wondering for you specifically, do you look for a specific client profile, or tell me more about the clients that you work with?
Well, we work with a variety of clients, being in this diverse area. We have clients who work for the tech companies,
of course,
get a lot of stock, equity, and so forth.
Uh-huh.
And we also have small business owners who we work with. So we work both with their business and with their individual taxes. So it's convenient for them, and it's convenient for us to work with both sides.
Okay, well, that's good. So it's like a variety of clients, and it sounds like you work with pretty much anybody.
Pretty much, anybody who needs tax help and who just needs some advice and, keeping on the straight and narrow and so forth, we're here to help.
A lot of folks that are on the fence or they're renting, they want to know what's so important about owning real estate as it relates to taxes. What is the benefit?
Well, as it relates to taxes purely would be the mortgage interest deduction and the property tax deduction. That's a benefit that a lot of homeowners are able to take on their taxes, and it allows them to itemize their deductions.
Okay. What does that mean? What is itemizing?
So when you itemize your deductions, the IRS gives you either the standard deduction or itemized deductions, and you take the higher of the two.
Okay.
So basically, that's the number that comes off of your income when calculating your taxable income.
Okay. I have another question as it relates to just taxes, actually property taxes this time. A very common question I get from folks that own homes right now is, I, as a real estate professional, know that the property tax basis of a home is initially set on the purchase price of when the home closes,
right.
Okay? But how does the property tax potentially increase on a year-to-year basis? Because sometimes people ask me, my value has gone up. It's gone up a lot in just 1 year. I'm going to get a hefty property tax bill this year because my property value has gone up. I mean, what's your take on that?
Well, the people of California have the voters to thank for on that one, because there's what we call Proposition 13, which was passed a long time ago, a number of years, which caps the amount that the property tax is able to be increased each year.
Okay.
And that's typically it's 2%. So when you initially buy your house, like you said, they assess it based on your purchase price. And any given year, they can only increase your property tax a maximum of 2% any given year.
Okay.
So they cannot all of a sudden reassess your home to the next higher value just because.
So it's not based on it's separate from the actual true market value of the home. So the market value of the home could be going this way, but because of the cap of the property taxes, according to Prop 13, it's really there's that cap that doesn't let it go up as high as fast.
Exactly.
Okay.
Exactly. So
That
people
makes sense.
in California are protected from that, and that's a good thing for homeowners.
Good. Next question, vacation homes. I have folks that sometimes are looking for second home, vacation homes.
Sure.
How does that work? Is there any deductibility on mortgage interest or property tax on that as well?
Yeah, so if it's purely a vacation home, you're not renting it out for any days, you can typically deduct the mortgage interest, but you have to calculate how much mortgage interest you have on your primary residence, or how much mortgage you have on your primary
Okay.
residence and on your second home. And combined, you can have a mortgage of up to $1.1 million and deduct the interest on that.
But so anything beyond that?
Anything beyond that is not deducted.
Okay, got it. So there's a little caveat to that. Okay, so it gets a little bit technical.
Yeah.
Okay.
And then property taxes, they don't have a limit on on what you can deduct and whatnot. So you can deduct all of the property taxes
On a vacation type of home,
Right.
provided that it's not rented out.
Yes.
Okay, that makes sense. Well, which leads me to my next question. The same question kind of applies. How does it work then for investment property homes that are rentals? Any deductions or what can we do with property taxes and mortgage interest there?
Sure. Yeah. When you own a rental property, you can deduct all of the interest and property taxes, as well as all the other expenses that you have for upkeep of the house, if you have to pay for utilities and so forth.
Like property
That's
management
deductible.
fees?
Property management fees, any commissions you pay.
Redoing the roof?
Redoing the roof, yes. You
Uh-huh.
would have to capitalize large expenses like redoing the roof or changing the HVAC system.
Uh-huh.
You would have to capitalize that and take depreciation. And another benefit of owning a rental property is that you can take depreciation on the building. So that will reduce your taxable income when it comes to rental properties.
Okay.
You get the benefit of depreciation on the actual house, the building part, and the fixtures in the house.
Okay. I wanted to go back to let's talk about primary residences again. When I sell a home as a listing
Right.
agent, a most common question is, what types of benefits do they get on the sale of the home? Are there any exemptions on the equity that they gain on a home when they do a sale? I want to hear more about
Right.
that.
That's a great question. Well, there's what we call the IRS Section 121 exclusion. For married couples, you can exclude up to $500,000 of capital gains, and single people can exclude up to $250,000 of capital gains on the sale of their primary residence.
Okay.
Now, the only catch is you have to have lived in that house for 2 of the past 5 years. Doesn't have to be a continuous 2 years. It just has to be 2 of the
Last
past
5 years. So they could have lived in it, for example, in the first 2 years and maybe rented it out?
Yes.
Like
For 3 years.
3 years, and then they could still get that exclusion.
Right. The calculation on the gain gets a little bit complicated. When you rent it out, you start to take depreciation and so forth. So there's some calculation there that you have to work with. You make it a little bit more complicated by renting it out
Right.
after you've lived in it. But that's something you can leave up to a professional.
Well, that leads me to my next thing. I want to thank Chris for being out over here. Everybody's scenario is different, so if you had any specific questions to run by Chris, why don't you leave the audience with your contact information?
Sure. My name is Chris Torres. I'm with Irvin Abrahamson Company CPAs here in Palo Alto, California. My phone number is 650-856-6161, extension 308. You can also email me at Chris, CHRIS, at stayrich, STAYRICH.com.
Oh, cool. Well,
Thanks a lot.
Thanks for being on the show, and I will see you guys next month.